All right, welcome to another video from the chart readers. So this is something I've wanted to do for a good while. This was a request, but I'm glad it was requested. So instead of only making charting videos, and look, clearly chart reading is important enough for me to name this thing the chart readers, right? So it is important and it is the bread and butter of what I do. There is this baseline knowledge that is important, right? And it actually defines a lot of my trading strategy. And you hear me talking about trading strategy a lot, right? So these really four rules, the fifth one's keep learning. We'll get to that shortly, right? But these four rules I think are pivotal to setting up a good trading strategy. There's obviously a lot of different things. Like, look, we're not even going to talk about the moving averages on this thing. I'm not really going to talk about technical analysis much on this video, right? This is very much just good foundation for a trading strategy. You know what I mean? Nothing here I necessarily made up, but I think I at least will explain them in better ways, hopefully. And even with the first one, I think I kind of changed what is normally said, right? So I'll get into these specifically shortly, but the last just general thing, and then it is the last one, but it should be the first one. It's look, don't stop learning, okay? My videos are only a small portion of what I hope is your trading knowledge, library. I don't know what else to call it, right? But find people and trust me, I put so much time into getting better. I actually did pay for classes, and I've said that on a couple videos, and that really started a lot of it. But once you get hungry for knowledge and once you learn what else you can learn, oh man, your game will change. So let's get into this one. So again, there's really four rules. The fifth one is just keep learning. But on the top is you can't beat a bad market, but you can crush a good market. Okay. Again, I'll get into the specifics shortly, but way too often people say you can't beat the market, you can't beat the market, you can't beat the market. And as true as that is at times, look, I think the other half isn't said at all. You can crush it in a good market, okay? And if you really believe that and you hold that in your back pocket and you just sit and wait, oh man, I promise you the money will rain once the time is right, okay? Number two, and I wish I talked about volume a little more. I need to figure out a visual way to incorporate that into our chart readers stack, but volume is king. Okay, and there's a reason that one's number two on this list. I mean, volume can be the difference between a continual uptrend or a real devastating downtrend or a real shady pull the rug pump and dump. I mean, volume is so critical to a number of things. You know what I mean? So, with that volume one, we're actually going to talk about two things. Okay, first is a minimum entry based on volume. Okay, if you've never even thought of that, let alone if you don't have that number in your head, this video is going to change your game a little bit actually, because most people only focus on a specific dollar amount before they get in, right? It needs to be this before I'll buy it. That's very, I mean, for a bunch of different reasons, that's not a good mentality. Including a minimum volume requirement will change your game, okay? Because it'll make you look at different stocks differently based on the volume, and that's a really important thing for you to do, okay? So the third one, I'll be honest, I've personally lost some good money breaking number three, okay? And it's stick to your time frame. And look, I'm a daily and weekly swing trader. That's who I am. That's what all these videos are, right? There are people that literally they just put money into a stock. They put that a specific amount every month and they don't do anything else but that. They're a long-term continual buy. Hey, that's great if you can do it, right? There are other people that have their finger on the mouse. They're intraday traders. They're moving up and down like within the minute, within the hour, within whenever, right? And again, doesn't matter which one of those you do, just stick to it, because when you break it's really bad. And again, I'll get to examples for that later. Number four, okay, I feel like most people don't talk about number four, so hopefully this video will, right? But I don't think enough people talk about the risk side of risk and reward. There are definitely good rewards, but if the risk is too high, is that really worth jumping into? right? And then how do you establish what that good risk number is, right? It's going to be hard for me to do it because I'm telling you, there's so many different situations. Like, I don't know if your daddy or mommy invented whatever, right? Or, hey, if you're a successful lawyer, doctor, if you're just an intern or whatever, right? So, I mean, that risk number is going to be a little more up to your situation, but I'll at least give you a couple, hopefully, nuggets of info you can put in your back pocket, right? And then the last one is just simply don't stop learning, right? And when I say don't stop learning, that's going to be my only technical analysis thing. There are more indicators out there. There's way too many to know them all, but there's more. And if you can add more indicators, all you're going to do is make a stock perform at a higher criteria before you put your money in it, right? Right now, the way we do it, let me see which one we're on. I'll get to that shortly, but right here we have moving averages, we have a MACD, and we have an RSI, right? And again, I'm not trying to get too technical, but there's a few things it needs to do here and a few things it needs to do here before we kind of say, hey, this thing's good. You know, I'm never going to tell you buy or sell anything, but I'll generally say, hey, if you do certain things here, you do certain things here, certain things here, I'm going to give you a thumbs up. This is good, right? You do whatever you want with that. The last part is I'm going to show you my personal stack because I've talked about it, right? When I go here, my charts is it's either a blank chart, which is how I teach people that it's better to do that than a blank. Chart readers is what we do, and then the one, right? So I'll show you what the one is based on an email from May 2005, and I'll give you a sneak peek of it. But you can see I have moving averages here. I have some sort of line thing here. I do actually have the MACD, oops, and it's actually overstacked with a couple other things that you don't necessarily see here yet. I have volume with something else, and I'll show you what volume is, but my something else is a little different than what's organic. Another thing of things here, and one of them is this histogram, the other one's this double line thing, and then another thing down here that's some lines, right? So I have more things that I want to see good greens on, right? And I still do the same thing, right? I remember even call it green is good, red is bad, right? Like just because I have more things doesn't mean I can set it up to not be, this isn't difficult, right? Once you know what it is, it's good, right? It's just a little more complex than this, right? And you can do that, I promise you. And it starts with learning, finding some more indicators and go from there. So again, we'll get to that last bit just a little bit later, but let's get to the first one, right? So what I'm gonna kind of do is start by going to the fireplace here. We'll talk a little bit basic and then I'll go to the charts a little bit. So look, everyone talks about you can't beat the market, right? There's a real famous bet between Warren Buffett and someone. I don't even know who this someone is because that someone lost, right? No one cares about the loser, right? So Buffett basically said, hey, look, I'm going to put some money in the major markets. I don't know if it was the S&P 500 or whatever it was, right? It was either the S&P 500, the NASDAQ, or the Dow Jones. If I had to guess, it was the S&P 500. Maybe it was the Dow Jones. I doubt it was NASDAQ. I don't think Buffett would do that. Either way, the other person was someone like me, okay? They said that they can move their money around however they do. Obviously, that person's not making videos because they're way richer than I am, right? But they have their stacks and they're moving their money. And, over a course of what I think was a long time, I think it was like maybe 10 or 15 years, right? The bet was who's going to do better, the major markets or this master trader, right? And the story ends with the master trader giving up before the bet was actually over. He was like, I'm actually so far behind, it's over, right? And, I think too many people focus on you can't beat the market because of stuff like that. However, I'm going to just go back to the words. You can't beat the market. It's true. There are I don't want to even say can't. There are people that, do however they do, whatever, right? Generally, it's extremely difficult to beat a bad market. However, you can crush, you can destroy, you can do exponentially better than a good market. And if you're actually willing to believe that and put that in your back pocket, it'll give you a little more patience during these bad market moments that you should already know are going to be extremely hard to win in. And when those good ones come, you jump and you make your money, okay? So I'm going to go to the charts real quick, but I sincerely hope you believe that, right? One more time. You can't beat the market. It's partially true. It really is. It's so difficult to beat a bad market, but you can beat a good market by a lot, okay? So let's go to QQQ. So the only reason I'm looking at QQQ instead of NASDAQ itself is I have less horizontal lines, and it's a little easier. So just right now we're looking at 22, right? And that's obviously the year we're sitting in, but I'm just zooming out a bunch right now. This is 21, this is 19, 16, all the way down. I mean, I can even keep going really. Let's even stop here. Let's just stop right there after that bad crash. So when was this? Again, it's not about knowing when the bottom is in this, but from 2002 all through roughly 22, for 20 years, this thing was going up. Okay, there were some bad and look, we're in a month right now, right? So each one of these represents a month. This is, when is this? This one's February, this one's March, right? They're all in the same year, but they're all a month, right? Now, it's not good to have these little 3-month dips. That's ugly, right? 2-month dips. That's ugly, right? I mean, I'm telling you, people lost a lot of, like, this one was COVID right here, right? And that was a horrible couple months. Everyone remembers that not too long ago, right? But if you can find yourself with 1, 2, 3, 4, 5, 6, 7 consecutive months, one bad month, another 2 good months, one bad month, and then another 4 month with a come on, you don't need to be a good trader to do this. And look, all this really did was go from 117 all the way to 170. Okay, that's a decent percentage. I'm not going to pretend that isn't, right? But in that, you could have done, I'm telling you, extremely, if not exponentially better, because there are, it is what it is. I mean, I don't even know how to explain it. I'm not here to tell you like why these things are. It's just, it is what it is. Again, another one, this little, because look, 1, 2, 3, 4, 5 months equals how many weeks? 4 times 5 is 20 weeks. Then there's another 5 days per that 20. That's 100. For 100 days of trading, it pretty much went from here to here. Can you imagine how good that 100 days of trading was? I mean, just let that sink in. Now look, where are we today? And look, again, hey, maybe, because look, even this thing, right? This is a pretty bad one. We're actually kind of not as steep, right? This is a real steep drop. This one's just kind of a little bit longer, but even if you take, and then this one's even more horrible, right? But look, once we crack that, again, it just look at it, market always goes up. So I'm really less concerned about these, and these. I'm just telling you in general, when the market goes up, and it will, all right? I just don't know if it's next year, next month, 5 years. That's not the point of this. You can make good money, okay? Just right now, it's not a good market. We're going down. We're going a little horizontal. That's not what you want. You want that. You want that, right? And look, we haven't seen a bunch of consecutive months. It kind of seems like there might be one coming here, right? And, again, I'm not talking about the month specifically, but hey, if we can get a good little 3-month, I'll take it, right? Even if we go back down after, at least I know I grabbed what I could before we keep going down, right? So, and the problem is it just gets really hard to get out before it goes down because we're all just naturally greedy, right? So that's pretty much what I wanted to say for number one. You cannot beat a bad market. It's true. Buffett won his bet for a reason. You can't beat it. It's hard. But if you're patient enough, you can crush it in a good market. And then you just sit out and wait. It's hard if you're, a little gambler like me, right? So let's talk about number 2. Volume is king. Okay, I'm going to go to the fireplace. So I really regret that I don't have volume as one of my indicators for the chart readers. I think I do actually want to find a way to do it. Because again, I'm going to go back to it just very quickly. On my personal stack, I actually do have volume, right? Volume is really important. So I'll find a way to include volume actually. However, there are a couple ways to use volume. And I'll tell you, the first one, I don't think a lot of people really talk about much, which sucks, right? But there really are minimum volume requirements. I'm going to actually show you on the charts too, so you can actually get a visual of what I mean, okay? Volume really messes up technical analysis readings if it's too low, okay? And it's This is really the main reason, okay? So when people buy stocks, the one good thing, right? The one thing that everyone loves saying is, hey, you can at least get out. You can just sell, right? Whenever you want to sell, someone's there to buy it, you're good to go, right? It limits your risk in a lot of ways. The problem is there are actually stocks with such low volume that if your money's in there and you wanted to get out, you can't get out because everyone is clicking get out, okay? And the major markets don't hit a lot of things, you know? So, again, going a little deeper than I want, but believe me when I say it, there are some literally almost nothing per day trades. And if you accidentally bought one of those, oh man, you might have your hand a little too deep in the cookie jar, you know what I mean? So, again, minimum volume entry, that's what we're going to start with. And then the second part, which I've talked about on my videos, right? But again, the last thing you want is a wild drop in volume the next day. The one thing you really want is just consistent buying, buying, buying. More buying than yesterday, even more buying than the day before. You know, you're making a nice little uptrend in volume, right? So, we're going to go to the charts real quick, okay? So, I'm going to hide this and this, okay? And we're going to look just here. Now, one of the things that I had said earlier was when volume's bad, it's hard to gauge technical analysis. And the easiest way to do it is you go to the minute chart. So let's go to Apple. AAPL? Yes, Apple. On the minute, okay? This is a normal looking chart, okay? And it'll make a lot more sense as we start looking at bad ones, right? But we're seeing a bunch of candles just like we would. Look, it lost the moving average cluster and it fell. That's a thing you've heard me say before. It definitely bounced on the 200, bounced on the right. This looks really normal. You would have no idea that this was the minute if you accidentally clicked there because it looks a lot like the daily, right? These look similar. Let's go to Meta, okay? Again, another one. On the daily, it looks like this. On the minute, it looks similar. Again, this is a normal looking chart. Technicals still act the same way. You lose the 8, you'll lose the 8, right? All that sort of noise. What happens as we start going into less volume? And look, why do those two look like that? Because their average daily volume is good, okay? And when I say good, I mean it's high. It's definitely in the like high millions, right? I'm gonna be honest, I have no idea what it is right now. But it's good enough to make the chart look like this, okay? Now, as you start going lower and lower in the like tier of stock, again, no offense to any of the stocks I'm about to show, right? Some of them I actually like. You've seen me say it on the videos. You've seen me say it in the charts. Like a couple of the ones that I'm unfortunately gonna insult a little bit on this volume part. I like them, okay? And I've traded them. But you'll see what happens. So let's move into some other ones that we look at. Look, Tesla is an EV stock, but it has good volume. The charts look like this, right? Very, very good. What does Mullen look like? Okay, not too bad. Not too bad. But hey, we get a couple more. And again, it's gonna stand out a little bit more. Yeah, there's for sure a few more. Can I zoom in? So not really, but you see how you get these like couple minutes of straight horizontal? Couple minutes of straight horizontal? That's actually not a great thing. And again, it's very, very minimal here. So hey, Mullen at least does pretty well in terms of sitting with it. What does EV Go look like? This is a little more extreme than the last one, but by no means the worst. Look, these are some good candlesticks, right? This is not, okay? This kind of says EV Go doesn't actually have a very high average daily volume, okay? You can easily guess EV Go has less than all of them that we've seen already, right? Mullen has good, I'm not going to call it a meme stock, right? But it has a good passion stock, meme stuff, whatever. Has good volume. Tesla, the rest are big. EV Go, not a lot of people are trading this, so it looks like this. Getting a little lower, so let me jump to another one that I know. Look at this. This one's TMC, okay? Look, I like TMC. Nonetheless, this is a lot uglier than Facebook. It actually has a couple candles, which is chill, but like, look at this. Look at this, right? Look at this. None of them look like this, right? Not, and this just means, look, there's not a lot of volume on TMC when you like zoom out and put it into perspective. And one dangerous thing could be is if this thing tanked, and knock on wood it doesn't, because I like this stock. I have no money. I swear I actually have no money in it, but I like it. I would never want this one to tank. But you know, if it did, and all you guys wanted to sell and gals wanted to sell at the same time, you might not be able to fill where you would think you would be able to fill. I'm going to go to another one. Again, I like LIACF. I do. Look at this. This is ugly. I don't have to say, like, there's maybe two candles. Again, with Mullen, we had, oops, too zoom. Sorry about that. We had like the couple, like that one right there, that one right there, maybe those two, right? That little bit. But even those are still pretty good candles, right? Especially after all the other ones we saw. With LIACF, it was almost the inverted. It's like the candles are the scarce things, whatever that word was supposed to be, right? So again, LIACF, again, on the daily, and you can see how many lines I have because I've traded this thing for sure. And this thing has literally went from $1 to $5 after going from $1 to $3, right? You know what I mean? So you can make money on these, but they're not safe. Okay, and that will go into that risk reward thing that we're going to talk about later, right? So just keep that in mind. And how do you avoid these? Here's your answer: 1 million, 2 million, maybe 3 million minimum volume. Okay, again, have I traded? And look, I promise you, and we'll see. You know what? Okay, you know what? Let's do this. Add plot. Okay. Look at this. I was going to show this later, but look at all these indicators, right? Look at how many indicators. Look at all these indicators. All I want to really show is some basic volume, but so many indicators. When you add volume, this one gives you a moving average 50 line, okay? So you can see this is the average over the last 50 days. Some days were way above. Some days were way above. This whole thing was way above, right? And that was this, and like I said, volume is momentum, right? So again, then it starts to go under the 50-day volume, and you see a crash, right? And then it just kind of sits with it, for lack of words. You go horizontal. Then there's people excited, and it goes back, right? So volume's important. But look how low that 50-day this is. I just told you, try to stay in a stock that has like roughly 3 million. This one has 136,000. Okay, let's look at Meta, which was a good one. We said this has 39 million. Okay, you get that, right? Tesla, what did you have? 73 million. Look at that. What did Mullen have? Oh my goodness. And like I said, this one's a little bit memey, right? But and look at how much volume reacts here. You're doing better than your average. You lose it and it's not doing well, a little bit of a spike. But again, we're not here for little spikes, and that's not what the point of this thing is, right? But hey, there's kind of a little bit more action. There's been a little bit more pops, and hey, you can kind of see that there, right? But yeah, the 50, ooh, my voice cracked, sorry. The 50 is definitely a nice thing to have with the volume, and you saw that was automatic when I did it on this thing. But yeah, again though, 174 here. Where was EV go? This one's 1.4. This one's a little bit on that lower end, right? And again, what did the minute look like? Not as horrible as TMC, right? I'll at least say that. Definitely not as horrible as LIACF. I imagine TMC will have more. 34. No, you're lying. What? Yeah? Wow. Dang. That's pretty low. That's a lot lower than I thought. And this thing actually has it down here, but that's on the minute. On the daily, yeah. No, this thing's right here, 400. Okay. Yeah. But no, we were looking at the minute. Wait, what were we? Did I just get lost? I did just get lost. Okay, nonetheless, we were talking about the daily. That's where EVGO on the daily, you were 1.4. Yep, that's right. TMC on the daily, you're 400, and then LIACF on the daily, you were 100. That's right. There we go. Sorry, too many numbers. Okay, good. So hopefully you understood that. 3 million is a good place to be. Again, I'm talking about stocks with very much less than that, right? We're also talking about stocks with very much more volume than that, right? So just more about keeping a perspective and giving you a new baseline that you might not have had before, right? So the second part, I'm going to go to the fireplace because I sincerely don't have an example, right? But a lot of the reasons of a pump and dump come because of a huge volume decrease the next day. Sometimes you'll see a stock jump like 20, 30, 40, 50, 60. I'm telling you, I've seen some silly percentages in one day, right? The day after, if the volume drops, I promise you the percent is going to drop as well. So that one's a little more basic. I feel like more people talk about that one, but yeah, hopefully you learned a little bit from that minimum volume entry in our rule number 2. So going into 3, stick to your time frame. Okay, stick to your time frame is a real one, and there was a good example of it yesterday. So look, you know, if you watch my videos, I am a day trader, right? I care about a full day finishing. I care how the full day does on these moving averages, and I act accordingly. I literally need to wait till the end of the day to make my decision for tomorrow. That is how I should do it as a good day swinger, right? A week swinger, whatever you want to call it. Mullen, 2 days ago, look at this thing, right? Mullen spiked, okay? I remember waking up to seeing this thing, and I mean, again, this is such a big run that you kind of get greedy and you want to do some intraday movement, okay? And look, maybe you can, but hey, what happens if like something comes up and hey, maybe you bought it here, it ends up going all the way to here, but you went away because something happened and then boom, it actually closes right here, right? So again, don't get caught up on a big flashy single day. And again, I'm not trying to push down. I like Mullen. You know that. I'm waiting for it to recover. But because that's how I trade. Intraday, again, we're going to go to the minute just to go to it, right? So this happened 2 days ago. Someone definitely bought it right here, kept holding it. Oh, it looks like it might lose the 8. And then it does, right? Same rules apply in the minute that it does to the daily, right? So if you're a minute trader, hey, you're real happy that this thing happened. Hell yeah. If you're a day, weekly like me, get away from this noise, right? Even more dramatic, hey, if you're a yearly trader, right? Maybe look at the quarter. The last time this thing was over the 8 in general was back in the late 2001s. And you just ignore everything and you sell right there, right? Again, it sounds easier than it is, I'm telling you, especially if you like to gamble, because we all know stock trading is just like gambling, and if you ever pretend it's not, you're lying to yourself, okay? So just know who you are, stick to your time frame, and again, we'll even go to the yearly. Why not? Let's just see what the yearly is saying. Man, this thing's actually never gotten over the 8 on the yearly. So that's not a good thing, right? Because I'll show you Meta, right? Oh, it took this thing hasn't been trading that. Oh, because it got rid of Facebook. What's a long stock that's been around for a while? Give me one. Wayfair. You're lying. What? Nonetheless, these are at least over the yearly. You're kidding me. Probably Apple is not even going to have it because it just did a split. Oh, it did. Great. Thank you, Apple. So look, a good place to be is have your yearly over the 8, right? If I say that, and look, this thing's actually never, just a little bit here, I guess, but you can pretty much say for its life has never been under the 8, right? So again, if you're a long term and you want to look at some charts, hey, go ahead and look at the late ones. You can see the power of like quarterly and yearlies, right? So don't ignore it. Don't think you shouldn't. But again, if you're a daily and weekly like me, don't get caught up in the hype of an intraday thing, right? So, and then, hey, if you're an intraday trader, just know who you are and do your thing, right? There is no right and wrong. So hopefully that does make sense to stick to your time frame. So number 4, find a comfortable risk and reward before you buy a stock. Okay, a little bit of a mouthful, but I think you get what I'm saying. We're going to come to the fireplace for this one, all right? So again, way too many people talk about the reward, right? You see postings of made this much percent, this is my yearly, and they're like in the millions with like 20, 30, 40% returns. Look, ignore all that, okay? Because everyone can tell you about how much money they made. I really want you to think about the risk part, okay? I think it's really important for you to think about how much are you willing to lose if you're wrong. Okay. And when I say willing, a lot of that has to do with like how the chart looks. And there's a little bit of stop loss theory in that I'm not going to get into on this video, but I promise you I will at some point. But overall, look, you've seen me make a couple videos at this point, right? I've been doing this for a few months and I've gotten some things wrong, right? And even I'm obviously trading stuff I don't even make videos on, right? I use scanners and I get so many random tickers and all that. And I'll talk about scanners one day too, but it's just it's important to I lost track myself. I'm not gonna lie right there, sorry, but it's important to understand how much you might lose. And there's a few ways of doing it, okay? So I had a friend who would set 10% stop losses, and I'm not the biggest fan of setting a specific number. For him, he loved it, right? And again, it's more important about what makes you comfortable because you can always find a way to make whatever is comfortable for you, make it profitable. I actually promise you that. There's very few strategies that are wrong. Just stick to it, make sure you're comfortable with it, and master it. You know what I mean? But it's important to know that you're gonna get some stuff wrong, and if you're willing to accept that, again, it'll give you a different perspective when you buy, and again, stop losses are huge, and I'll talk about that a bit. That's how you avoid those like stagnant numbers, right? But again, hey, if you don't want to lose more than 3%, I'm telling you, you can make that work. The only problem with doing stuff like that is you might miss a bounce point and you might automatically sell. But again, if you know what makes you comfortable, believe me, you can find a trading way to do it. The other half is, look, there are places, and I'm going to use the word support and resistance because just you even if you don't know any sort of technical analysis, you can kind of use those basic words to understand what I'm about to say. So the resistance is probably going to be what we'd call the ceiling, right? It's going to get as high as it does until it hits resistance, and then it's obviously going to not be able to go over, right? It's too much resistance. The support is going to be our floor, right? It's basically going to be probably as low as we go, the thing that it catches it, right? So, you can set a stop loss at your support hoping you get to that resistance up there, right? You want to make sure that where you're buying it is close to the support but far from the resistance, right? You get that? You at least want to hopefully have very little risk to a lot of reward. Because if there's something that looks like it has a lot of reward, but the risk looks way, way bigger, I promise you should look somewhere else. And hey, you might not make as big a gain if it both hit, right? But if both failed, I promise you're going to want to lose less money. It hurts to lose money more than it feels good to make money. Again, I'm telling you that personally. So I hope that made sense. But again, I feel like people don't talk about the risk side enough. Make sure you use stop losses, and I'll kind of try to do a stop loss theory video pretty soon. But the other side is make sure you're not getting greedy on rewards. I'm using word, right? This is nothing fancy here, but don't get greedy on your rewards. Make sure the risk isn't too crazy. And there's places you can find it where literally you're only going to lose a little bit, but you might make a lot if you're right. You know what I mean? So, and that's where I talk about trading above lines, and I get into more of my, theories on technical analysis, right? So the last thing, and like I said, look, so when I show my indicators, I'm gonna see, here's the thing. Let me do this. What's the other one? What view are we on right now? This is chart readers, right? Oh, it wasn't chart readers. Okay, I don't know what I was clicking. Or maybe it was, and then the volume thing. So let me add volume. Let's see what it would look like. Okay, hey, maybe I can add volume, and this is kind of what it'll start looking like. going forward. So it's actually now going to start getting even better. I love it. This is what I'll save this as. Okay, cool. Let's save this. Nice. Okay. How do I save? Right there. Great. Cool. This will be our new view. I've said it a bunch of times. This view, even before we added volume, now it's going to get even better. But this view here is fantastic. It's a really good intermediate stack. And I mean, if you never had these before, you should hopefully see that it helps explain a little bit better, right? When I personally trade, okay, I'm using what's called the one. And I'm not going to click on it because, like I said, I paid someone for this thing. And like after that, I started doing other stuff, and it just opened this world of how to learn. It really did, right? But the one specifically, this guy taught me. So this is the closest thing I'll do. But again, you still see the same red and green, right? Red is good, green is bad. If you see more green, that's great. And obviously you don't know what these other ones are. There's some like random white lines or some random white lines. But again, don't worry about that, right? That's kind of irrelevant here, right? There's still moving averages. There's still a bunch of different things down here. And what ends up happening is, look, the criteria for me to say it's good on this video is a bunch of stuff here, this thing, and this thing. Now it'll be this thing too, right? The criteria for me to say it's good here is this thing, this thing, this thing, this thing, this thing, and this thing, right? You need to be legit on all of them, right? This is still way better than not having any of them because you have this, 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 and this. That's still a lot of thises. But having more, it just makes... Did I write it here? Was that in the... it's a higher criteria. If the stock isn't good enough to do this, 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 and that, hey, maybe it's not worth your money. Let's find the one that does that too, right? So just don't stop learning. And look, I'm gonna just show this more as comedy than anything. Okay, look at all these indicators. Okay, look at how long this thing goes up and down. When I wanted to add volume, look at all the... I don't know what these are. I don't know what the volume zone oscillator is. I sincerely don't. I have no idea who William is and what William's %R is, and who's William? I don't know, some dude, maybe. It's a simple guess, right? Like, look, I use moving averages. Exponential is definitely an important one to learn. Learn the difference between simple and exponential. That's a pretty important one, right? And I'll be honest, on our videos, we're using simple. In a better market, if this was a bull market, I would actually use exponentials. So right now I am intentionally using simple, but I do go back and forth with those. But again, I've only had the ability to speak well about two. Look, again, I don't know RHO. I don't even talk about options one, but Keltner, I don't know who Fisher. I know Derek Fisher because I'm a Laker fan, right? But Elder, again, I'm telling you, you don't even need to learn all of these because I've heard the word Bollinger Band. I used to call it Bollinger Band, and then someone said it's like bowling, Bollinger. But again, Fibonacci is another one I hear people... there are so many you don't need to learn, and it won't mean you're not good. So... don't stop learning, but keep it comfortable, right? Don't overwhelm yourself. And yeah, all right. I think this was a pretty good golden rules of trading. Again, I'll try to make a few more, but hey, I sincerely hope this made you a little bit better. Have a great one.